The investment money is working to build you wealth.
Right.
You become wealthy with your investment money. Your savings are there to protect you against an emergency. Your spending money is what allows you to
live your life.
Live your life and have the nice things. And so now we'll get into now how do you live more, live better today by earning more money in a bit. But this is where now the passive investing is the most accessible way for somebody to start investing. And then somebody's going to say, well, what do I invest in, right? Because we're talking about, well, you can invest in the stock market. There are funds, like there's index funds, ETFs, mutual funds. They all work similarly with some nuanced differences that allow you to invest into a basket of stocks, a group of companies. So for example, I like ETFs just because they're very convenient. So you invest in a ticker symbol.
ETF stand for?
Exchange traded funds. So for example, if you wanted to invest in the stock market, the general stock market, there's a fund, an ETF called VTI. Now I'm not telling you what to invest in, just giving you some examples. VTI is a total stock market ETF. If you invest in that one ticker symbol, you're getting exposure to the United States stock market.
You're getting diversified.
Getting diversified in the stock market. Not across different asset classes, but within the stock market. You could then, pick, I want to invest in, let's say, the S&P 500, which is the 500 largest companies in the stock market. SPY, there's a ETF that gives you exposure to that. Let's say you want to invest in the Dow Jones. That is the most commonly discussed fund. It is a group of 30 companies in the stock market, big, large companies. DIA is an ETF that gives you exposure to that.
So you could invest in 3 stocks, which would be hundreds of stocks throughout those 3 investments.
ETFs, yep. Those three ETFs will give you exposure to hundreds, if not thousands.
And all you need to do is invest in those 3 things and set it and forget it, essentially.
And now you can just set it automatic. So the key here now is you invest when the market's up and down. You don't change it. So when you see the market crash happen, you don't stop. You keep investing. The only thing that you would change is potentially buy more.
Yes.
Because when you see these types of market pullbacks, most people are selling and they're running away because they're panicking and getting scared that my investment is going down. That's when you want to become and buying aggressively because now investments are going on sale. And so this is where it's, again, that mindset shift of understanding what is it that you want to be investing in and how long are you investing for. If you're investing for the long term, who cares what's happening in the next 2 months or next 2 years? You're investing for the next 20 years. I call it a decade of sacrifice. If you want to become wealthy, and seriously wealthy, not like, I have a little bit of money. No, you want to become wealthy. You got to put in what I call that decade of sacrifice, where you're working to spend less and earn more. That way you have more money to invest. And most people are not willing to go through that sacrifice because that means I can't have that Gucci belt today so I can have more investments today. I can't show off my stock portfolio or my real estate portfolio the way that I can my Gucci belt. And most people would rather have the show, would rather have the look than the actual thing that will make you wealthy.
Right.
And that, goes back to the mindset, the thing you talk so much about. Your mindset has to be focused on saying, I want to become wealthy. And that's hard because now, for one, you have to be convinced yourself. And now you might have a spouse, you might have kids. And that means you all have to be on the same page financially, right? Because money is a team game. It's in the house. If you think, I'm going to go and try to build my wealth myself, and then your husband or your wife is going out and spending all this money, they're going to be pulling you back. So you got to be on board where I'm mentally on the same page, my spouse is on the same page, my kids are on the same page. We're going to build wealth.
Yes.
And we're going to build something that we've never seen before. And that's that first mindset where now I believe I can do it. I'm going to do it. Now you start putting in that sacrifice. So we started by the passive investing. Next is active investing. And I also should mention that you can do passive and active investing. I do both.
What's the example for you?
So I invest my money in 5 places. I invest my money into businesses, which are my own businesses, and startups that I invest in. I invest my money into physical real estate. I invest my money into stocks. I invest some of my money into cryptocurrency, a little bit more of a speculative play. And then I invest a small piece of my portfolio, about 2% of my overall investment portfolio, into physical gold. So my gold, my cryptocurrency, and some of my stock market investments are passive, meaning this happens for my stock market every week, for crypto every day, for gold every month. It's the automatic, passive, and consistent. I don't touch it. It is automatically pulled out of my checking account and it is invested.
Interesting. And your bank, you can set up parameters in your bank to automatically do this.
Yes.
2 specific places you want to invest in.
Exactly.
That's nice.
Technology has made investing so much more accessible.
Do all these banks do this, or what are like the top few that you see that?
Many banks will allow you to move money from one bank account to the other. These investment accounts, you're going to have to work with a particular brokerage. There's tons of brokerages out there that do this. You can find whatever you like for, let's just say you want to invest in the stock market. There's a bunch of brokerages out there that will allow you now to invest your money into the stock market through this passive type of system. You just have to find what's right for you. And this could depend on what country you're in, and just what interface you like the best. And it's become very accessible. There are so many, it is so much simpler now than 10 years ago, let alone 50 years ago.
Right.
So we are very blessed to be able to do this now.
Right.
On the active side, this is where now I invest into my own businesses. I invest into real estate, and then I also invest in some stocks.
Do you do real estate funds, or do you do your own individual real estate buildings yourself?
I have done some real estate funds, but that is the smallest piece. Most of it, probably 99% of it, is actual physical real estate that I'm going out and buying myself. And so now it's, when we talk about active investing, what does this mean first? This means now that you are going out, finding investment opportunities to invest in, and then you're putting your money in. And now this is where the research is important. So like, for example, with business, I invest in my own businesses. I also invest in some startups. Startup investing is very risky. 9 out of 10 startups will statistically fail. So I know that when I invest my money in these startups, a big chunk of this money I will probably never see again. But my goal is now that a small piece of these startups that I invest in will go big, and then that will make up for the other losses.
Yes.
With real estate, my goal is completely different. With real estate, my goal is cash flow. I call it cash flow because cash flow funds the guac flow. And what that means is now when I own a cash flow producing asset, I'm getting money coming into my account now every month with my real estate that I don't have to actively work to earn because I have a property management company in place, I have a system in place. So it's not like I have to go to work to earn this money. I buy the properties, I have the systems where we renovate the properties with the contractors, we do the right inspections. Then I give the keys to the property manager, my job is done. Now every month I'm getting cash deposited into my bank account. Every month and every quarter I get financial reports going over what's going on with my properties. So it's hands off. I still review the properties, like I review the financials, I review what the property manager is doing, but I'm not going to work to earn this cash. Now, I should also say, it took me a ton of work and a ton of time and a ton of headache and a ton of mistakes to learn how to do it the right way.
Yeah.
Because, I didn't grow up with real estate investors in my family. I had to go out and just kind of do it and figure it out. And it was very stressful. A lot of people on the internet make real estate investing seem like this holy grail. Go buy some real estate and you're going to be swimming in the dough.
But here's the thing, when you buy real estate on your own, it's almost like a full-time job, managing the property, if you're doing the Airbnb or short-term rentals, it's like you're going to constantly clean and adjust and promote it and market it and deal with the Airbnb stuff, or you need to find someone to pay to manage it.
Yeah.
But ultimately, at the end of the day, you got to deal with the taxes of it, you got to deal with the expenses of it, you got to deal with the fixing of it, you got to deal with the regulations around it, whatever it might be. So how do you invest where it doesn't become a time suck and an extra job in that real estate, but it's actually cash flow that is more passive? Is that even possible with real estate?
I can only speak from my experiences because for me, it was a huge time suck.
It was like a full-time job.
It was more than a full-time job.
Stress.
I couldn't sleep at night because of how many issues I dealt with. But
so why be in real estate today if it caused you so much pain previously?
Well, see, you go in with a vision, right? Like entrepreneurs, you have to be a little bit crazy. You don't know how something's going to work out, but you're putting in countless hours. You're not sleeping at night. You're sacrificing vacations. You're not talking to your family. You're doing a bunch of crazy things because you think this thing is going to work. That's how it was for real estate. I'm known for being like that stupid person, and I've always been that thing. And for me, it's like, I believe something so much that I'm willing to make a lot of sacrifices and keep doing something. And for me, when I invested in real estate, I was 19 when I started, when I bought my first property. And I did it kind of all by myself because I told my dad I wanted to invest in real estate. And I grew up in a very traditional Indian house. My parents are immigrants from a state in India called Punjab. So my parents came to this country with very little. And so, yeah, exactly. You got the Bhangra moves down. That's our dance. We were just talking about Bhangra before this. It's a traditional dance. But my parents came here with very little. And, they wanted me to be a doctor. And it was very like strict that you have to become a doctor, nothing else is the option. So anything that wasn't medical related was like a big no-no.
So becoming a lawyer, you were a failure.
And that was a huge compromise for me to become an attorney with my parents. But this is before I even became an attorney, where I said I want to invest in real estate. And my dad was like, and I was actually studying for the medical college admission test when I had the idea to start investing in real estate. And I had some cash saved up because I was working on an event planning company at the time when I was in college. My parents didn't know about that. So I was making a little bit of money and I was like, I want to invest in real estate. My dad's like, you're stupid. Go study, go become a doctor, and then worry about all this other stuff that you're doing. So I was like, all right, I'm just gonna do it without telling you. Yeah, you know.
So how much was your first deal?
My first deal, so this is gonna sound crazy.
Before the interview continues, if you feel like you're not living your most authentic life, not leaning into your purpose, and not living the life that your future self would be extremely proud of, I've written a new book called The Greatness Mindset, and I think you're gonna love this. Through powerful stories, science-backed strategies, and step-by-step guidance, The Greatness Mindset will help you overcome all the different challenges in your life to design the life of your dreams and then turn it into your reality. Make sure to click the link below in the description to get your copy today. Okay, let's get back to this video.
Because this was at the bottom of the 2008 crash.
So it should have been very cheap.
It was very cheap. This was in the Metro Detroit area. Detroit was especially hard.
Struggling then.
It was a small condo that I bought. The condo, about 3 or 4 years prior to me purchasing it, sold for about 150 grand. It went through foreclosure. The banks had it listed for $8,400.
Oh man, you got the jackpot of that thing, it sounds like.
I made an offer for 4 grand.
Oh my gosh.
I didn't know what I was doing, right? So I'm like, well.
Did you get it?
Well, I put an offer for 4 grand. They said, we'll give it to you for 7,000. And I said, no, I don't know what I offered, something else. Maybe let's say 5 grand, yeah. And then another person came in to potentially buy the property. And so the bank says, we have another offer on the table. Give us your highest and best offer. Now, to put this in perspective, I didn't know this was a good deal because I'm 19. I knew nothing about money.
5 grand's a lot of money at 19. It's like all your money.
Yeah, so I know nothing about investing. I didn't know what passive investing was. I had only read books about investing. So I'm reading some books and now I'm just going out doing it because I know nobody in real estate. I didn't even know you could invest in real estate. So I'm like, okay, well, somebody's making an offer. I kind of like this deal because I looked at a few other properties. So I was like, well, how about I make an offer for 8 grand? We'll see where they go. And the bank took my offer. The other person offered less than what I did.
Wow.
So I bought it for 8 grand. I put in a few $1,000s worth of work, and then I listed it for $600 a month. And the profit on that was between $250 to $300 a month, depending on the month, which now sounds great, right? This is the beauty of real estate. The downfall is it was a big pain because I didn't know what I was doing. I hired I don't want to say scam property manager because I haven't been able to validate that, but I don't know if they were licensed.
Right.
The tenant moved in, we didn't have a lease. The tenant was absolutely crazy.
Ooh.
They had my phone number. So now I'm going to class. Like I remember I was coming out of my chemistry classes or my physics classes and I had these voicemails, these multi-minute long voicemails of the tenants talking about how the world is ending. They're like, this property is going to go up in flames. So I was like, oh, what's going on? I get an electrician out there. We go to the property, and this was like after multiple issues had happened. I went with an envelope of cash. I probably had like $50 of cash in this envelope that I gave to them because I felt bad for the tenant. Electricians looking at the property, they're like, yeah, your light bulb fused. We can just replace that.
That's it.
That was it.
Yeah.
There was an instance where they were cutting cucumbers on the countertop. They missed the cucumber. They scratched the countertop. She calls me crying that she needs a brand new countertop.
Oh my gosh.
I gave it to them.
Oh.
Because I don't know what's going on. So like, I dealt with a lot of issues, and that was just the first one. I've been like the first, I would say 3 were my learning curve, where I was like a full-time, like I'm on the phone talking to people, trying to find contractors. I'm trying to find the right attorneys. I got screwed over by attorneys. I made every mistake possible.
Why'd you keep doing real estate after the first 3 failed?
Yeah, see, this is where the stupid comes in out of me. Well, I read books and people talk about how investors own thousands of real estate units. I was like, how can somebody deal with thousands of tenants like this? Like, it's not possible. Like, there has to be a system. I just had to figure out how to crack that code. How do I break this system? And that was my journey, was learning it. And it was very painful, very expensive, and very stressful because the third deal literally depleted my bank account. I was talking to my wife about this the other day where that third deal was so stressful because I made every mistake possible. I talk about this on YouTube. It's my worst real estate deal ever. I bought the deal because my contractor told me it was a good deal. He told me that, hey, we can fix it up for not a lot of money. And because it's such a good deal, you're going to be able to make a lot of money on it.
Wow.
So he's like, don't even worry about getting an inspection on the property. Just go out and buy it. So that's what I did. I trusted him, right? Bought the property, gave him the money, he ran away. I didn't know that he wanted the money because he was running into financial problems.
Oh.
Then this property, it turns out, had a lot of defects behind the scenes, which I didn't know. We had the city come out and look at the property, and the repairs cost way more than what the actual property cost. And so now I was really in trouble because I wanted to get this property rented out. My bank account, that property account, literally went negative, and I had an overdraft fee on this account, which I had no money to pay at the time for that property because I was putting all my cash into this. And like I was saying before, I was in the event planning party business, which was a cash business. So I had like literally a bag of cash in my room. So I went to my last resort, which is I pulled the cash out of my bag and I gave it to the contractor. I was like, dude, we got to get this done. I need to get some income out of this property because I couldn't sell it.
Right.
I couldn't get a certificate of occupancy. I couldn't rent it out. And so it was like, I was so stuck. I was fortunate that I had that cash, but I mean, it was a tough situation. That was my real life tuition. Like that was where I learned, like I say, that one deal taught me years worth of real estate in one property because I learned so many things that I should not do. But then from there, I was able to stabilize. I made some more money with other ventures that I was doing because I was making money for one reason, to buy real estate. Like that's all I was doing.
And losing it in the real estate.
Losing it in real estate. But I was learning, right? That was my learning process. So I guess I can't, I wouldn't change it because I learned a lot from it. Very stressful. Like when I say I lost sleep, I lost a lot of sleep during that time.
So when you're going to buy a property now, what is the approach that you take so that it maximizes your return, saves you time and energy, and minimizes stress? What is the approach if you're like, okay, am I buying single unit properties? Am I buying apartment buildings? Am I buying duplexes, fourplexes? Am I working with another investor and buying a bigger deal? What is that thought process into buying a deal?
Yeah.
First off, and then how do you set it up so it doesn't take you a lot of time to manage it?
Sure. So I would say the first thing is I need to know what my return is going to be. And generally, my general rule of thumb is I need a 7% cash on cash return.
Annually.
Annually. And what that means is for every dollar that I invest, I want to see 7 cents of cash flow. That's money that's hitting my bank account after expenses that has nothing to do with appreciation. So I want to look at those financials. I want the 7% cash on cash return. Then I got to look at where am I investing? So I like to invest in areas that are growing, that have more like up and comingness to it. So this is now, I want to see populations at least stable, if not rising. Do a quick Google search of any city and Google will tell you what's happening with the population. It's made it so easy.
Wow. What are the top 3 cities that are rising that are also not overpriced right now? What are those top 3 cities?
Let's see in 24 months where that actually is because we're going through this correction in real estate right now. So let's see where interest rates go because that's going to influence housing prices and real estate prices in general.
Interesting.
But keep an eye on interest rates. The general thing is as interest rates go up, property prices will go down. So let's rediscuss that.
What do you think is going to happen in the next 12 months with interest rates?
Well, the Federal Reserve Bank says that they're going to raise interest rates. And if they keep doing that, they're going to push this economy into a lot of pain.
Because it came down a little bit, right? Recently?
So mortgage rates and interest rates are two different things. So interest rates set by the Federal Reserve Bank are called the federal funds rates. This is the interest rate that one bank pays another when they lend each other money overnight. So think of it like the wholesale price, right? When you go to buy this mug from Amazon, Amazon's buying it from the manufacturer. They're buying it cheaper. Then they sell it to you at a marked up price called the retail price. So banks have this wholesale price called the federal funds rate. Then they jack it up and sell it to you as the mortgage rate. So federal funds rates, the Fed rate, can influence where mortgage rates are going.
So interest rates can be different than mortgage rates.
Right. They are different than mortgage rates.
What's the current kind of interest rate at the time of this interview?
For mortgage rates?
For the interest rate versus mortgage rate?
So the federal funds rate right now is right around 5%, just under 5%, the federal funds rate. Mortgage rates are hovering around the mid 6% for a 30-year fixed rate mortgage.
Wow.
Now the question is, where are we going to go from here? The Federal Reserve Bank has a mission to fight inflation. That is a big deal. It is a super serious problem, and we've discussed this in other interviews. So I'm not going to go too deep into like what is inflation, why that's happening. We have an inflation problem, and that is a serious problem, because if we don't solve the inflation problem, then we risk a serious currency crisis. We risk potential hyperinflation. We risk our dollar losing the reserve currency status. So it is a serious issue to bring inflation down, because yeah, a recession is bad. A currency crisis is even worse. That's why the Federal Reserve Bank is working to increase interest rates, because that brings down inflation. Now,
They're looking to increase them.
increase interest rates.
And what about the mortgage rates?
So that pushes mortgage rates higher.
Higher.
So now rising interest rates have a consequence. And that consequence is a slowing economy. Because when you raise interest rates, it makes borrowing money more expensive.
And less people want to
borrow
buy.
money, less people buy. And now if you remember what we said just a few minutes ago in our economic system, spending is good for the economy. Higher interest rates, less spending, bad for the economy. Our economic system wants people to spend money. In fact, they want you to be in debt and spend money. Because if you're in debt and you're spending money,
They're making money.
they're
More
making
money.
more money.
Yeah.
They want you to be in debt, because more debt means more spending today. That grows the economic
They don't
system.
want you to win.
They don't want
They
you to
want you to be
right?
spending.
Exactly. You kind of go through this like waking up process of realizing, is this right, or should something be different? And I think that's where people start their journey of, what do I do? And fortunately, because of YouTube, it's become much more accessible for people to find information. Before YouTube, it was much more difficult. But even then,